Fixed income's been a really tough place for the last 2 years, 3 years coming on, right? Talked about that a number of times over the last, 2, 3, 4 roundtables. And when interest rates went straight up, our fixed income prices came straight down, right? And so we had really poor performance in the fixed income area. And one of the thoughts that I had as rates have kind of peaked, again, none of us thought we were going to see 6 rate cuts, even though that's what was forecasted, but we thought maybe 1 or 2. And so historically speaking, when rates start to come down, we start to see an appreciation back and a rebound in those bonds. And so, yes, I guess we're a little early. We haven't seen a ton of climb back or growth in the fixed income area. We're being compensated with the rates now, so that's nice. So we're at least being paid again to hold those bonds. But I have a chart here because we keep saying, well, is the Fed going to change rates? When are they going to change rates? And essentially what this is showing here is, comparison during the rate cycle, the rate hiking cycle, and versus when the Fed starts to cut rates. So bottom line is if you start investing back into the fixed income, so a lot of us have gone shorter in duration or in treasuries or money markets or CD rates and things during this period of time. Mm-hmm. But the question's always been, okay, well, when do we kind of start rebalancing or reallocating back into intermediate term bonds or our core bonds again? And so a lot of people tend to want to wait until the Fed actually starts cutting those rates. And as you can see, that hasn't been the case yet. We don't know when that will be. It's just they keep kicking that can down the road. But what this shows is that if you kind of just wait to the end of the cycle where we've seen the rate hike kind of peak. We don't see any more rate hikes coming. Doesn't mean it can't, or data can change, but right now it hasn't really forecasted any more hikes, just cuts. You see that if you start making those allocations back into that intermediate core bonds, you start being rewarded more so than if you wait for the Fed to actually start cutting rates. And so I guess my prediction was a little bit early, but it is still positive since our last one. But it's still a space that I'm cautiously optimistic that we'll start seeing some positive principal growth too in the fixed income area over the next couple years.